Hello dear viewers, the Union Budget of 2018 is just a few days away from here, and I'm sure investors, traders would be very curious to know what's going to happen and what are going to be the repercussions on the stock market post the budget. We here have an expert who's going to comment on the budget of 2018, what's going to be important, what's not going to be important, and what's going to happen to the market post the budget. Mr. C.A. Rudramurthy here would explain to us how the market is going to go ahead and how 2018 is going to look from here. So sir, can you give a brief introduction about yourself?
Yeah, I am C.A. Rudramurthy. I am a chartered accountant by hobby and an investment consultant by profession. I am the managing director of Vachana Investments Private Limited, and I do give my views to CNBC TV 18 and many other business channels, and also my reports on market are quoted by Reuters, Bloomberg, Wall Street Post and many other magazines similar to that.
Perfect, sir. So sir, let me just get down straight to the budget. What are the most important aspects of the budget this year? What is going to be the most looked on upon the point where investors will take key on this and invest in the market further? So what are your suggestions, sir?
See, when it comes to specific stock market, there are three important points what market is looking from this budget 2018. The first and foremost point is on the long-term capital gain taxation, and every year we keep getting these rumors that yes, we might have long-term capital gain taxation this year. But from 2005, we have been seeing about 12 years of time where we have no long-term capital gain tax, and people keep talking every year, and that will be very nervous moment for market. I personally feel I don't see any requirement for long-term capital gain taxation to come now, but market is very scary. By chance, if you see any long-term capital gain taxation, and even if they charge 10% rate, that will be very, very negative to market. The psychology will be dented. But however, if I keep a longer time frame, I don't think even if they bring long-term capital gain taxation, that may not impact value investors and people who are buying great companies and stocks. I can give a classic example. Just because you have exemption of GST on poison, people will not go and drink poison going to a medical store just because you have no GST on poison. So what I mean to say is, irrespective of whether you bring in long-term capital gain tax or not, value investors and people who are buying into stocks, they are buying looking at great businesses. So this is one part. There is also another side of rumor where they are thinking if not taxing long-term capital gain, they might increase the time period from the current 1 year to either 2 year or to 3 year. Even if that happens, for me it will be a 2-day, 3-day impact on market, but again market will continue its big bull run. I am very clear, the next 5 years, the next 10 years, India is seeing a structural change in its economy. I won't be surprised if I can put my neck out and call, this will be the biggest bull run ever in the history of Indian stock market, which we might see next. So for me, the first most important point from the stock market viewpoint is about this long-term capital gain tax. If they don't even touch and they don't even talk about long-term capital gain, that itself will be a big positive to market. The second most important point will be on the fiscal deficit. What will be the number? Market is expecting, as per the previous budget estimate, this year fiscal deficit number should be around 3.2%, and for the next financial year the projected number was 3%. But however, I feel even if they go slightly above that 3.2% target to 3.3%, market will definitely take it positive. And even for the next upcoming year, even if it is somewhere close to 3.1%, still it is very good. The recent announcement, if you see, government borrowing, which was projected last quarter that it might go up to 50,000 crore, has now got reduced to only 20,000 crore. And this has happened because direct tax collection for the last quarter has gone up close to 7 lakh crore, and which is an increase of about 19%. So because of better direct tax collection, government spending, which was estimated to be close to 50,000 crore, has now come down only to 20,000 crore, and this will be a very positive impact on our fiscal deficit, and numbers may not go to 3.5%, which many people were scary. So fiscal deficit number is second most important thing what people are looking for from the budget. This year I don't want number to go beyond 3.3%, 3%, and for the next coming year I don't want it to go beyond 3.1%, and I'm pretty sure it will be managed within this limit. The third and the final most important point what market is looking from this budget, other than the long term capital gain taxation and as well as what I told about this fiscal deficit, we have to even see what the government amount in terms of its divestment can be. We don't want anything to go beyond 75,000 crore of divestment target. Also, this budget might be very populistic and agriculture and rural based budget. Even then, I don't see any reason why corporates should enjoy this budget, because I feel if they can reduce the corporate taxation rate from that 30% to 28%, and let us say even to 25%, if they can bring it down over a period of some time, that will be a real big boost to economy. For me, in spite of demonetization, in spite of GST, in spite of these type of one-time reforms which has ever happened in economy like ours, we are seeing GDP at 7.1%. IMF had projected GDP of 7.3%, but that is without considering GST, without considering demon. But after demon, after GST, you are still having this 7.1% as your GDP figure. That for me is a spectacular achievement. So for me, I am very clear, budget can be just a non-event for a lot of people who are value investors. Whether you bring in long-term capital gain tax or not, whatever is the fiscal deficit number, what I am pretty sure is that negative move, even if it happens, can happen for 2-3 days, but eventually 5 years down the line, 10 years down the line, we have a very, very big shining India and nothing better than stock markets to put your money on.
Perfect. Also, my next question would be regarding the knee-jerk reaction. If the budget is going to be positive, what kind of immediate reaction is the market going to have? How many points, according to you, would it go up or down in irrespective ways, whether it's negative or positive? What do you think, sir?
Yeah, see, gone are those days when only on the budget day we used to see a very big movement, and it used to make either a make or a break kind of budget to stock market. The extent of change which used to happen or the amount of volatility what you used to see some years back is definitely not seen today. So I feel, because currently we are at the top and many people are still expecting something more from this budget, even if something happens on the very positive side, things like no long-term capital gain tax, things like fiscal deficit within control, things like corporate taxes getting reduced, no big benefits to, let us say, populistic kind of budget to common men and things like that. If that happens, I won't be surprised if we can go up even 3-5% from current levels for very short term. But even if you get negatives like, let us say, long-term capital gain taxation, even if you get negatives like, let us say, it's a very populistic budget, they're giving exemption limits to common men in a big way, and even if all that happens also, I am pretty sure the 2-3 day negativity might be there in market. Too much money is waiting in sidelines to come back to market. I'll give you simple statistics. FIIs have sold close to 85,000 crore in last 15 months in our market. So from October 2016 till, let us say, January 2018, close to 15 months, FIIs have sold close to 85,000 crores. But in the same period, we have our local money, the domestic institutional investors, they have pumped in close to 1,20,000 crore. So this whole bull run what we have seen is funded with local money. So I am pretty sure now what has happened, if you just see the January data of FII and DII activity, both are buying together. FIIs have now started back close to 5,000 crore they have bought only in the month of January. So now FIIs are buying, DIIs are buying, everyone are buying, and there are many people waiting on the sidelines thinking something negative can come in budget and they are waiting to buy. So even if you get any negative reaction because of some negative news, psychologically even if market gets some correction or some dent, I see definitely the sideline money which is waiting will come back and it will give big support to market.
Perfect. Also, let me put a point across regarding sectors. Which sector according to you is going to benefit the most out of this budget? And also, what would be your picks on stocks in terms of those sectors?
Okay, good question. Also, let me give a disclosure that I might have direct as well as indirect interest on whatever I talk, and even my clients might have definitely positions on the same. Keeping that disclaimer, let me tell you for sure, if you ask this question to anyone in market or even some experts, they will surely pick the first sector as agricultural related rural theme. That is because if you see even the results, election results which came from Gujarat, even if you see what happened in the recent MP results, what happened, even at Madhya Pradesh results, everything shows to me very clearly that because this is the last chance for Modi government to do something big to common men, and also having a lot of state elections upcoming in the year, including Karnataka where I come from. So I am pretty sure definitely it might be a very populistic and rural based budget. Make in India can now be changed into make in rural India. So that means it can be more an emphasized budget on agriculture. See, we get close to 17 to 18% of our total GDP contributed from agriculture, where hardly in global standards it is only 6.1%. Even in terms of the dependency of our population, every 2% out of 3 depends on agriculture today. So keeping these things in mind, and also might be support for the agricultural product prices, in terms of even warehouses, in terms of irrigation. So these are all themes which can definitely work very well. Now keeping aside this common sector which everyone are talking, I am very bullish, especially for budget as well as my pick sector for 2018. I feel definitely based on valuations, pharma can do very good, IT can do very good, excellent, and even certain specific themes and sectors like hotel industry based on the consumption theme, even things like let us say fertilizer, and stock specific you have lot of gems available even at current valuation. People keep telling valuations are expensive, but at any moment I can still pick stocks which can still give you good returns from here on. So to put it very clear, also I really back this housing sector and even housing finance as a theme, because Modi is talking about 2022 every individual in India should have a home. He is talking about farmers' income doubling by 2023. He is talking about 2019 every village should have power. So if you can just pick up these 3 themes what I am talking, for sure housing should do very great. Housing finance related stocks sector as a theme should do pretty good. Even things like infrastructure, things like cement, power. So these are all very clean, good areas. You can pick beautiful stocks. So if you have to make me name few stocks in this particular sector, see for sure might be when I look at rural theme, when I look at themes related to agriculture, Jain Irrigation can be a wonderful stock even at current levels. I see a lot of upside possible on Jain Irrigation from current level. You can even pick stocks like Escorts, which will be a play on rural theme, agriculture, so related ones. You can even pick up stocks from hotel industry. I like Indian hotels a lot, so that's a great stock to buy. And even something to pick from, let us say, even real estate can do good if someone has a time period of let's say 3 to 5 years horizon from now, that will do fantastic. So stocks like let us say, even though you have seen this Kolte Patil, Purvankaras, they have all moved up very huge. Suntech Realty was one stock which I was liking a lot. It has already been a 5-bagger, 10-bagger from last 2 years price, but still stocks like Suntech Realty, Kolte Patil, Godrej Property, these are wonderful stocks which can do fantastic for next 3 to 5 years. For sure they will be market outperformers. And even from cement, something like Ramco Cement is a very good pick even at current levels. So people can just study this theme and then pick up wonderful stocks, and for sure they should do good.
Perfect. So these were all the positives what you have given regarding the budget. But what's the most curious question here? What's going to be the downside of the budget from here on? How do you think the budget could turn back on the stock market and bring the most awaited correction from the last 2 years.
Okay, see, let me put my point very clear. People are very scared on valuation. They are talking about the froth which is there in market. They are saying we are short of ideas. I do accept everything. I won't be surprised even with some trigger market corrects. But one has to clearly understand valuation can never be a trigger for market to correct. Valuation can only decide how deep the correction will be. Valuation cannot be a trigger for market to correct. Then what can be the trigger? The trigger can be a policy from a government, might be something like your Demat, GSTs and things like it, or it can be an international global news which can be a trigger. It can be a Fed decision, it can be decision by our central bank, RBI can do some rate hike or something, or something to do with a macroeconomic event, crude oil prices now shooting above $70 per barrel, and even in spite of all that, market is at all-time high. And anything like this, either your crude, your central bank decision, your government policy, or your dollar rate, so something like this should be the trigger for market to correct. But valuation can never be the trigger. Valuation will only determine the extent to which market can correct, because valuations are very rich at current level, might be the correction extent might be determined based on valuation. Yeah, so I am very clear that in spite of valuation being expensive, still we have great ideas and we are seeing structural change in the economy. People have to remember. Let me give one small example and a comparison, especially for retail crowd. People say, what if we would have bought just before the crash in 2008? Let us take an analogy for what happened in 2008 when market fell close to 50% from the top at index level. Let us say you bought at the very peak before the market crashed in 2008. You had bought, let us say, HDFC Bank. You had bought, let us say, Asian Paint right at the top before market fell. Even if you would have bought right at the top and then market fell heavily, look at today's price of HDFC Bank, look at today's price of Asian Paints, look at today's price of Maruti. Even at the peak, if you would have bought before the correction in 2008, Maruti, it was somewhere close to 1000 rupees. Today Maruti is close to 9500, 10,000. I am talking 10 times return, not even mid and small cap. I am not talking mid and small cap. I am only talking Asian Paint, HDFC Bank, I am talking Kotak Bank. If you would have picked up even Maruti at the peak, see, what is important is not timing in market. The time what you spent in market is important. And let me give a superb quote. I always say this, there are only two people who can catch the top and the bottom of market. Only two people can catch the top and the bottom of market. One, God. Two, liar. So God and liar, these are the only two people who can catch the top and bottom of market. We don't want to time this market. As a trader, it's a different ball game. But as a classic good investor, where retail people are now seeing bank interest rates falling, you don't have opportunity to put your money in real estate. For the first ever time, you are seeing price-wise correction happening in real estate and gold. You have no other asset class and there is nothing else except to bet on shining India. So keeping this very clear, I say there is a big bull run happening for next 5 year, 10 year. Let correction come in. That's just an opportunity to add to quality stocks. So buying quality and selecting the right stock plays an important role. Just not looking at Sensex going to 35,000, will it go to 50,000, will it go to 1 lakh, will Nifty go to 15,000, will it go to 20,000, 50,000. Buffett clearly says this. He says, don't look at the forest, look at the individual tree. So I always say, don't look at all girls of this world, look at your wife. So I tell people very clearly that don't look at your Sensex, your Nifties and other stuff unless you are an index trader. But as a good investor, buy in great companies. Even if a stock falls 40-50% from your buying price, if it's a quality stock, it will surely bounce back. So play on Indian theme, stay invested, buy good quality stocks, get good advice. Always I say people, what I see is post-tax return. Let long-term capital gain be taxed. So post-tax, even after that long-term capital gain taxation, if I can make big money, how does it matter to me whether you bring in long-term capital gain tax or not? So for me, what is very clear is, short-term there can be hiccups in market. 2-3 days I might see, even if the budget is very negative, market might correct. Because valuations are very expensive, we might see some correction in market any moment. That can happen anytime. In fact, this is where Peter Lynch says, people have lost money not in real market corrections. They have actually lost money expecting market to correct.
Exactly.
Yeah.
Perfect, sir. So let's conclude this talk about the budget with just one last question.
Yeah.
What would be your suggestion or advice for the people awaiting the budget?
Very simple. I say people, especially if you are long-term investors, retail people, freshers who are coming to market for the first time, buy into quality stocks. Pick up large cap value stocks. Don't jump into mid and small caps just because you get entertainment. There are other places for entertainment, not stock market. My second suggestion to people who are already there in market, and the most important one is, you have great stocks still available at current valuation. So buy into these great stocks. I've named some of them and I do have direct or indirect exposure to them, and even my clients do have. Third important suggestion, what is important is, end of the day, have an expert who can help you out based on your customized requirement. Everyone's risk profile is not same. Everyone's time horizon is not same. So keeping in mind your investment risk profile, expected return, time horizon, your asset class mix, your taxation, everything, one has to plan right stocks which suits that particular individual. And if you can just believe in this Shining India story, let budget be positive or negative, I am very clear, 5-year, 10-year down the line, the biggest money is only available in equity market, and no other asset class can make you more richer than investing in equity market. Believe in India's story and you will become rich for sure.
Perfect, viewers. So you have heard it from the expert. Thank you so much, sir, for your inputs.
It's my pleasure and privilege.
Have a great
Thank
day,
you.
sir.
Thank you.